Good evening, it's Pops. Welcome to Pops Around the House. Hey, I want to talk about SUKU tonight, the digital asset SUKU. Recently pumped and I caught a couple of trades, made some money, 25%. The real important thing that I want to highlight a mistake that I made here. So I'm looking at the 4-hour chart on TradingView. And this is market cipher indicators down here and up here, and this is the RSI, relative strength index, and also the simple moving average. Now on the 4-hour chart, it was showing a lot of strength on the 10th, and I bought some SUKU. A couple days later, it was showing even more strength, so I bought some more. And I always go for a 25% pump. I have patience to wait. Now this only took until the 25th, so we're going from the 10th to the 25th is 15 days, 13 to 15 days for me to sell on both positions. Now, I don't really have a position because I don't do leverage, so it's just I buy and sell. And so I bought back here at what was the price? Almost 4 cents. Okay, and I set a sell price of plus 25%. Okay, but then I saw it got stronger. The charts got stronger, especially on the higher time frames, and I bought some more and set a sell price of plus 25%. Now, with that in mind, if I expect to sell at a higher 25%, so I should increase this lower purchase to that higher percent. So all my notes in my record keeping indicated that I intended to sell it, that smaller position, at plus 34.2%. Okay, well, guess what? In all my record keeping, I forgot the most important record at all, and that was to cancel the 25% order and make it into a 34% order. Well, I forgot to do that. So I ended up selling both of these positions at 25% when the lower dollar I could have sold for a little bit more. You know, it's I'm trading 20. I have 20 open trades at any given time. They're non-leveraged, so I don't have to manage stop losses and things like that. Because I only have a limited time in my day with working to manage these things. Now, for example, one thing about an open trade, or excuse me, a leverage trade, I would normally have to set a stop loss. Okay, now a stop loss might be set at minus 2% or 3 or 5% even. Well, if you look here, between the time that I bought on the 10th, all over here, my price actually dipped. My value of my purchases actually dipped between 7.9 and 13.8% on those trades. So, you know, I would have lost 2% or whatever with a stop loss. But, you know, we're in a generally emerging out of the bear market, so I can handle having a price dip for a little while. But anyway, so you can see how, you know, this 4-hour chart here, you can see this dramatic pump, 25% increase over here. And it was actually more than that because the price had gone down, but this dramatic pump, you know, for me to expect the price to continue going straight up like that is a bit ridiculous. And so what I do right away is I set a 1-hour retrace potential, which is based off of the 1-hour chart, and you can see it's at the bottom of this candle right here, because right in here there's no retrace. See, let's look at the 15-minute chart. All right, I'm going to look at the 15-minute chart, and you can see that as the price is increasing, it went up and it came way down, up and down and up and down, and this is all called retracement. You know, price people are buying, people are selling, people are setting stop losses for longs or shorts or whatever it may be, and the big money folks are, you know, moving price up and down and grabbing those stop losses. So right here, and I go on the 1 hour chart, and this candle right here, really, let me get rid of these drawings. This candle right here sticks out like a sore thumb. There was very limited retracement in there, so there could be some liquidity in there with some long leveraged long stop losses right in there. So it's very likely, you can see the green candles when it pumps up, green candle, or excuse me, orange candles when it goes down, and nothing happened in here on the 1 hour chart. So I would say right there is where I would want to set my retracement potential, and I'll do that. I'll put the drawings back up again, and you can see that's right where it is. And realistically, it's actually based back on the 15-minute chart, which on the 15-minute chart, this is the candle that actually sticks out like a sore thumb. So anyway, but let's look at the, go back to, again, the 4 hour chart is where I made my decision to buy, and I also, at that time that I bought, I confirmed my suspicion on the daily chart, which was, this is, we're looking at the daily chart, and we can see that what I have here is a recent daily low was right here on October 18th. That was the bear market low price of SUKU. So prior to hitting that low price, it came down almost to that level, pumped up a bit, and you can see all this orange here is retracement. Okay, and so a person, you know, when I see a chart like this, when it's all downhill, boy, I'm really hesitant to do any kind of purchasing right in there. But with this first pump, now the market is starting to open up, the market is starting to notice, and some people are buying. There's some price action is what I want to say. So then it started coming up here, and you can see that the let me take the candles away, or excuse me, the drawings away again, and you can see that right in here when I bought, the simple moving average was going up, the excuse me, the RSI was getting stronger, okay, and also the momentum wave was in an upswing. So so I bought, and I also was looking at the overall picture. This is the daily, this is the 2-day, okay, and this is the 3-day, okay, and you could see how, go back here again and get rid of these, but you can see how the RSI was still coming up in here on the 3-day, and you know, when I purchased back here. So, and if I even go out to the week, I don't know that I can see the week, but you can see that once the price started moving in here, all of this is going back to November of 21. So it's 2 years of 1 week candles just going downhill, okay? And so basically now is just a fantastic time to buy and sell for me. It's not financial advice for anybody. This is just documenting for myself a $200 to $2,000 trading challenge that I'm in, and I'm doing that by going for 25% pumps, and I've now hit 40 trades in 3 months, which is pretty good. I need to get to, I believe, 240 to achieve my objective, so I'm well along the way. Listen, and you know, looking at the RSI here and the simple moving average, you know, this could go up. It's definitely heading in the upper direction. However, I want to go back here to the 4-hour chart again, and keep in mind when this went straight up here for the last day, basically, there was 2 8-hour time periods in there that went straight up. I'm really looking for a retracement and to look for the signals for this to go up again. So, in other words, if I bought here at 420 and I just sold at 525, if I just held that while it's retracing, and it might not retrace, you know, it's hit or miss, flip a coin, but it's very likely that would happen. So why, rather than sell up here, what if my other alternative was to hold on while this retraces, and in the meantime, I'm, you know, what am I'm not gaining anything, so that's why I sell at the 25% level. And it's just, it's a number that I figured out. It has nothing to do with any fundamentals of price movement, but excuse me, I do see a lot of digital assets pumping 25%, 50%, etc. In this time coming out of the bear market. So that's why I do go for at least 25%. And you know, I've lost some 50% already because I you know, automatically sold at 25, and you know, la-di-da, no big deal, on to the next one. But in other words, if I held on to this even at the high price there, and thought, well, it's going to go higher, however, in the meantime, it comes back and retraces to from 525 to 430 or 440. Well, I have then lost an opportunity, because this way I've sold at 525, and then I can buy again at 440 and go for another 25% pump. So that's what I'm doing. I'm rotating my money. And basically what I'm doing is creating my own, being proactive and creating my own 10x or 100x portfolio, rather than purchasing things low and waiting for a year or year and a half for them to peak out in the bull market. Anyway, that's it. Listen, it'd be awesome if you liked the video. Subscribe. These are really crude right now, but they'll get better. Trades are popping off so often that I barely have a chance to keep records. As you can see, I made a mistake here on this one. So doing videos is pretty tough, but I do, and I appreciate you listening, and hopefully it will inspire you to get into crypto trading, or at least pay attention to the market, because this is kind of like the internet. You know, just, geez, I can't tell you how excited I am about this market. It's really young, and it's really volatile, and there are just massive opportunities here. That's why I'm involved in it. Anyway, take care. Pops out. Thank you.